Good morning, good morning. It is 7:29 a.m. Tuesday, October 11th. I'm here to break down my trade ideas for this New York session. Right, so I'm going to be going over the economic calendar. I'm going to be going over the DXY US dollar analysis, the investor sentiment, and then finally my trade ideas throughout gold and GBPUSD for today's session. Now, today we do have another light day in terms of economic data, where we had some data overnight for the UK economy, some labor market data, and something that stands out the most here is the 3.5% improvement from what was forecasted and what was the prior reading for unemployment rate. So unemployment rate dropped to 3.5, similar to the US data on last Friday. It dropped from 3.7 to 3.6. UK had a similar drop in unemployment rate. So this is a positive, in my opinion. This collection of data is pretty positive for the labor market. Now, having a positive data for the labor market gives the green light again for the central bank to continue raising rates, because the primary focus right now across the global economy is to bring down inflation, right? So a strong labor market, a drop in unemployment is actually a positive sign and a green light for the central bank to keep raising rates, right? So so that was for the GBP. So I haven't looked at GBP strength so far, but this is quite positive for them. Apart from that, there's no data for the rest of the day here. We might have some headlines coming in from FOMC members Harker and Mester. So for these headlines, going to be looking for them to maintain the same rhetoric that inflation is too high, that they need to bring inflation down to 2%, that they need to continue to raise rates and keep them high for at least all of 2023. They know that that's basically the primary focus of what the central bank wants to accomplish by any means necessary, right? So we want to make sure that the Fed is continuing to say the same things and have the same stance on monetary policy. Now, Monday and Tuesday have been light so far. Tomorrow, Wednesday, and Thursdays is basically and Friday as well is the day where we're going to have the most amount of data. So I'm expecting again Tuesday to be a low volume and volatility day, just because of the lack of data, and that investors are potentially waiting on the sidelines for Wednesday. We've got GDP figures for the UK. We've got the US PPI data. And we also have some FOMC minutes tomorrow. So these are significant data points. And as well, Thursday is going to be a very big day as well with US dollar CPI, right? So they're going to be expecting a slight drop in CPI and a slight increase in core CPI, actually. So I'm expecting, again, Tuesday to be a low volume day as investors stay on the sideline to wait for the highly anticipated inflation data for coming a little bit later this week. All right, so having said that, let's go to the US dollar chart here. Now, we are maintaining this bullish structure. We have not moved since the beginning of the week here, but let's break down the chart again and evaluate the buyer versus seller strength here. Obviously, we are playing the higher time frame US dollar strength from the Federal Reserve being extremely hawkish and raising interest rates. So this is a positive for the US dollar. And as we can see, our market structure is continually printing some new higher highs. And then from this level, we gathered some liquidity and we broke into new 20-year highs here, right? So this is the highest point since 2002. From this high, we did enter some pullback phase where some buyers started taking profits and sellers jumped in, creating this pullback. And this pullback just led price to retest this previous liquidity zone, and from there we've actually entered a new phase where buyers stepped in and actually broke above previous lows and previous highs here, right? So buyers are back into control into this intraday time frame here, where we have printed new intraday highs around 113.5. However, right now we are retesting the original sell side order block that started this pullback. We're retesting that here and having some reaction. So it is highly possible that from this level we have seen a accumulation of orders here. We're starting to see some weakness off this level. So it is safe to say that we may get a continuation of this pullback, at least to retest this previous high level, or even deeper to retest the previous lows here, and to potentially set up some price levels for the PPI and CPI and the important data for the US dollar for the rest of the week. And we may end up getting the continuation only after this pullback here, right? So I'm still extremely bullish on the US dollar. However, I know that we're high in terms of price here. We've printed this high, and we're failing to break this previous level of sell side liquidity. Even though it's pullback liquidity, it still could be enough for the US dollar to come into this pullback here. We may end up getting a better buy opportunity across our US dollar pairs at better prices here. So I'm bullish on the US dollar, but as long as we don't break this level here, we may end up getting some short-term weakness. And so I would only validate some more buys if we're coming back to this zone and we're failing to break, or if we break above these previous lows here, right? And then we could be a little bit more confident to say that the US dollar bulls are back into play. So this is a very key level here, and expecting some short-term weakness to set up for the rest of the week when we have more data. So potentially a slow day or a pullback day on the US dollar. And this correlates pretty well with the equity markets here, as we completely faded out this profit-taking move from these lows here. Sellers taking profits brought prices to new intraday highs, created a double top, failing to break higher, instead faded out this move completely. However, we're getting some signs of exhaustion near those lows here. So the pullback on the US dollar could be correlated with a slight pullback on the equity markets, where again we may end up setting up better prices for sales to continue around this weekly key level. Or even if we come back to retest these previous highs, I'll still be looking for equity markets to sell off based on, again, the Federal Reserve hawkish stance, and they're raising rates and they're bringing down inflation. So the value of assets are going to go down, including gold, including the stock markets, including any risk asset like housing market, etc. Right? So I'm anticipating, again, similar to the US dollar chart, as long as we don't break this level, right, we could end up getting the pullback here. I would need to either see that pullback and some new resistance forming, or a break below this daily level to show that the main bias is back into play. And we also see the VIX here after this pullback and failing to break this weekly key level. We got this spike to the upside, and so far we're just staying flat near the highs here. So again, no new highs created, nothing that shows me that, oh, today we're going to sell off, today the bears are in control. Everything so far in my analysis points towards today being a slow day No data, no economic data. US dollar somewhat weaker now, rejecting previous levels of potential sell-side liquidity here, entering a pullback. Also, equity markets failing to break previous lows, creating some sort of double bottom, and yeah, so not expecting too much for today's session here. Let's go over our global equities are basically pretty much similar to the US 500. All three equity markets here, the Dow Jones, the S&P 500, and the Nasdaq are all in the red so far. The UK 100 as well is in the red. German, Australia, and the Hang Seng are all equity markets are lower, and VIX is higher. So this is showing some weakness here on our equity markets, which makes sense. Our US dollar is a little bit mixed here. It's a little bit weaker against the yen, weaker against the pound, and weaker against the euro. It's only stronger slightly versus the Canadian dollar, Australian dollar, and the Chinese yuan. The yen here is also pretty mixed, only higher against the US dollar, the CAD, and the Australian dollar. And the pound seems like it's the strongest currency so far here. It's up against all of the other currencies right now. So based on the currency strengths, and we see that the pound and the euro is actually the strongest currencies, which shows a little bit of relief, because technically on the higher time frames they are very, very weak. So this plays another confirmation into my pullback sentiments for the day here. Now, having said that, let's go over on gold and start breaking down from the daily time frame what is going on here. So obviously we have this bearish market that is in play, that we've been playing since the beginning of the year, basically. From the 1800s, we had the pullback to the 1800s, failure to break previous lows, and then we got into this aggressive sequence of bearish events of lower lows and lower highs, lower lows and lower highs. And this was the most recent lower high that pushed price into these new lows at 1618. From these lows, sellers aggressively took some profits as buyers stepped in as well, and pushed up the price of gold. However, gold only came up to retest these previous lows and this previous lower high, which was the prime price for sellers to come in and bring these prices down. And we've had a reaction as sellers came back, and is now starting to fade out this move here. So overall, on the higher time frames, we are still respecting this bearish structure. Now, zooming into the 4-hour. Now, on the 4-hour, we have price sitting right near an important level of demand here, 1659, 1660 here. This was the level where we had our previous highs here that we broke, retested, previous lows, gathered some liquidity, and pushed up into these highs. So now this entire bearish move from these highs has now came down to retest this level, and we're failing to break. So this is lining up with our pullback bias for today, that we may end up getting either some ranging at this level or a potential further pullback to set up better sell levels for the data coming out in later this week. So as long as we don't break this level here, we're going to pull back or consolidate. So in order to get back into the sells, I would need to either break this level and retest, and then we could end up filling this range here, or we're going to end up getting a consolidation before taking the sell, or we're going to have a deeper pullback and take a sell like this. So I'm still heavily favoring the bearish bias here. But these are the three trade ideas that I'll be looking for. Right, I'm going to look for the pullback sells around 1688, which is previous lows on the 1 hour, previous highs on the daily time frame here, and previous lows if you zoom out and look over here. Or we could sell off at the top of this consolidation, or if we break and retest this level, I'm also going to be looking for sells at that level there. Right, so on the 1 hour time frame, we do see again my sell zone right around here, this 1 hour structure. We had previous highs over here. We had a little bit of a structure over here, support turned into resistance, and this is a level in the market where sellers push down into these lows. So if we come back here, we can end up getting that rejection back to the downside, or for further pullback, we could get this weekly structure as well rejected, or back up again. So we have these three levels here, or the break below for my sell side trade ideas. Now looking at the pound US dollar, we are also playing this higher time frame bearish structure where the previous lows on the daily time frame was retested and rejected on the dot here as this pullback came in to gather some more liquidity, some better sell areas before coming off and starting to fade out the move here. Right? So we are maintaining this bearish structure on the higher time frames. Now on the 4 hour time frame, let's give it a second to load here. All right, so on the 4 hour time frame, we're also respecting this bearish structure, but we're at an important level in the markets. So again, you see across all asset classes that the structure is all the same. We are all following the same bias, the same fundamental catalyst that is moving all markets. It's the Federal Reserve here. So we know that across the DXY, across the equity markets, across gold, and even across GBPUSD, we are at a point where we are within this bearish structure here, but we're failing to break key levels in the pullback here. As we see, GBPUSD is just within this range here, gathering liquidity. So from here, I don't see any trade ideas from this range that are favorable unless we come up to retest previous highs that line up with this this lower high in the market, as well as these previous highs. So it's an important structure level. We could end up getting the sells from here. Or if we break below this level and then retest, looking for sells along those key levels, right? So right here or right here. So this, I need a intraday candle to close below this demand zone right here, and then the retest is valid. Or if we come up to retest these levels right here, this is a previous sell side zone, I'm going to look to sell right here. So those are my two trade ideas, playing the US dollar strength, but again, low expectations for today as the US dollar is pulling back, as equity markets are starting to exhaust, as we're seeing the investors stay on the sideline as low volume and volatility comes in, with today being a day that we have no economic data, and tomorrow and Thursday, very important inflation data coming out that's going to have a very strong impact on investor sentiment. Therefore, it makes sense that we're not going to have much movement today, maybe just ranging as investors are waiting to see what happens to inflation in order to make their next trade decisions.